All right, welcome back. I wanted to dive into an inverse fair value gap lesson of sorts today. Today's August 18th. We had quite a few good inverse fair value gaps this morning. My last video was going over regular fair value gaps. We'll kind of talk about what an inverse fair value gap is right now. As we mentioned in our last video, fair value gaps are kind of a 3-candle formation with a gap between the candles. So this first candle, second candle, and third candle, the high of the first candle and the low of the third candle, there's a gap, okay? And it'd be vice versa. So the low of the first candle is not the same as the high of the third candle. So there's a gap there. So we can mark out this fair value gap here on our charts with our rectangle tool. And now all that an inverse fair value gap is us breaking below this gap, okay? So in this case, there was a few fair value gaps this morning. You can work on any time frame. There was a 30-second short up here this morning that I was watching. We swept a hourly high to the left of us, so I'll mark that out as well because we did mention sweeping hourly highs. There's an hourly high sweep right here, and we can dive back into the 30-second chart. So this black line was our sweep of the hourly. We also had the 50% level of the overnight range. We can talk about that in another video, but this is an inverse. So we had the fair value gap. We closed below. You can take a short once we close below if you want. Sometimes you'll have to jump in early if the market's moving fast. Your stop would go on a closure above the high, or you can just place it above a swing point if you'd like. But generally we want to stop out when we close above. So if this candle were to close up here, we would exit for a loss. Otherwise, you can pretty much just target next liquidity points, target 1-to-1s, 2-to-1s. Okay, so the next liquidity point was pretty much right here in this case. So this would be right around a 1-to-5 risk reward here. Okay, there's another short over here. This is a very small fair value gap. I didn't take this, but again, bullish fair value gap. We invert it. We close below. You can put your stop above the fair value gap. I would probably put it at this swing point up here. And if we close above on this short trade, then we would take a loss. But in this case, again, targeting the next swing point, 1.6R. We can switch. I actually took this trade this morning. Let me mark this out. 30-second gap here, fair value gap. Market was moving so fast here that actually I thought it closed with about 1 second left. The price was here. So I entered here and we didn't actually close. So technically it wasn't invalid entry, but the market was moving so fast, I pretty much jumped in, expecting it to close below here, which was a good thing in this case because we did move down. I was risking about 15 points. I put my stop up here and there was an hourly low right here. So this little dotted line right here, that is an hourly low. So I took half of my position off right here at this swing point. So I entered with about 6 micros here. Again, bullish fair value gap that got inversed. I chased because the market was moving fast. So I was preemptively assuming we would break below this gap, which is risky, but took about half my position off here at this swing point, moved my stop to break even, and I took the rest of my position off down here. And that's an inverse, okay? There's inverses all over the place. Here's another inverse. We swept an hourly low right here, have a bearish fair value gap. We close above the bearish fair value gap, and then you can put your stop down here. And again, targeting 1-to-1, even if you targeted up here for the high of the morning, you could have done that. It ended up playing out. I didn't take this, but that would have been almost a 5R risk reward there. And there's inverses all over the place. It's about finding what is a good inverse. And again, generally, I like to take inverses off of key levels. So maybe a Asia high sweep, a London high, Asia low, London low, or an hourly high or an hourly low sweep. So we can talk about that more in another video. But again, here we swept the 5 a.m. low, which was also London low. So this was London low, okay, right here. Swept it perfectly, immediately reversed. Great long opportunity, great long opportunity. You can see we did have a long here and boom, pumped up. Beautiful, beautiful, beautiful. So just a short little video, what an inverse fair value gap is. Let me know if you have any questions. I'm gonna keep making little videos, little recaps like this. But this morning was actually pretty good for iFVGs. Like pretty much most of them worked. So you could have taken a bad one, it still would have worked this morning, which is good. Again, it works on any time frame, so don't be afraid to switch around time frames. I wouldn't use like a 5-second chart, but 15-second charts, 30-second charts, 1, 2, 3 minutes, 5 minutes, they all work. Even if you want to swing trade and use like an hourly time frame, you can do that too. But that's the video. Let me know if you enjoyed. I'll see ya.